Hey traders, Raghee here. Happy Monday, everybody. Welcome to Charts and Coffee. All right, so hope everyone had a great weekend. You spent a little time away from the screens. Time to get back to the charts and treasure hunting, as I like to think. All right, so let's get to it. Let's dive into the questions. And, just kind of a quick reminder. I hope that you've taken a quick pit stop at the economic calendar. I like this one over at Forex Factory. And what you'll notice here is we've got a pretty quiet calendar here for the 15th. And we really don't have major data until we get core retail sales tomorrow at 8:30. So remember, we're going to have that early morning wake up call an hour before the bell rings. So we'll have that sort of echo action as we get the 8:30 data, and the 9:30 Eastern group gets to react to it later. So just make sure you scroll down through the calendar. Just remember Wednesday. Is there a Fed member who's not speaking? That's a heck of a list there. So heads up for Wednesday. And so that's what we've got. Come Wednesday, come Friday, got a lot of Fed speak. So looks like we'll have at least clear sailing today and into tomorrow at 8:30, and then after that. All right, so with that being said, let's dive into just a quick follow-up of the Friday free video that was posted on the Simpler Trading YouTube channel, very channel that you're likely watching right now. And, this reminds me of sort of why it is difficult to stick with the trend that was, or why it's hard to sort of unprogram ourselves to think that just because something isn't going higher anymore or isn't structured bullishly, that it's going to fail. And so what we want to remember is the trend that preceded the sideways action that we're seeing through here was up. So there's more probability that we're going to find support at some level here and then resume. Now, here's what's really cool about waiting for a dip. Always got to ask ourselves, what if we're wrong? What if the market does keep going lower? Remember, by buying the dip, we've lowered our cost. By buying the dip, we're also closer to the point of validity. So everything that's associated with being wrong, we've sort of narrowed that pain chasm, if you will. So that if we're wrong, it should be nothing more than a paper cut. I still hate losses, but I hate bigger ones even more. So it's a quick follow-up to Friday's free video. And let's dive into the questions here, kicking it off with Chelsea. All right. What is my opinion on play? All right. For a swing trade. Sure. Jump into PLY, Dave and Buster's. So swing for me, and again, I think some of the verbiage of trading is always kind of tricky in that, what swing means to, I don't know, what swing means to most traders, I think, is still this sort of 3 to 5 day play. I mean, I'm not sure if that's still the common definition. I could be wrong about that. That was probably the most common when I was, I'd say the mid 2000s, maybe even early 2000s. But for me, swing is synonymous, there we go, with retracement. And it has nothing to do with 3 to 5 days. It has nothing to do with the time frame either. It's more the behavior of price. And then let's take it one step further, and I promise this will make sense in a moment if it's not yet. And then a retracement, for me, is only valid in a trend. So if I'm looking at a swing trade, the first prerequisite is a trend. And then I need a dip or a bounce, or, depending on which way the trend is. Having said that, there's no trend for me here. So so think of it this way too. Let's say is anyone out there is still operating with this 3 to 5 day window opportunity. And I don't subscribe to that. Let me make sure that I make that super clear. I never have. I think it's just basically flawed, but it's one of those definitions that seems to have gained acceptance in trading. If I don't have a trend, what I have found throughout my career is that there's less organization and less likelihood for follow through. Follow through is more predictable and more likely, probable, in trending markets. So my opinion on play is I won't, right? But let's keep an eye on it because it's done a couple interesting things. It's gone neutral, and it has now it's trading around the point of control, and it's north of the 200. So there's a few things that should get our interest, but not enough yet to have earned my capital for a trade based on what I like to prioritize. So thank you for the question. Let's see, Line Watcher. Hope I had a good weekend. I did. Thanks for asking. What sector benefits from high inflation, rising environments? Usually commodity and commodity related. What's going to benefit from that? Here's the thing, Line Watcher. I think that's sort of putting a little too much out in front of us. And I totally hear where you're coming from. So here's the thing. Let's not assume that the market has not already priced a lot of that in. And let's also just look at each market for the way that it's responding to what is higher inflation right now. Remember that if we're talking about it, and this is always my litmus test, if I'm talking about it, if we're talking about it, it's probably largely been priced in. But normally I'll look at commodities, but that's not playing out that way. So probably the more accurate answer is that what I want to remember is if there is a high inflation play out there, I have to see the structure sync up with that. So we can have a narrative that we think should create a certain type of trade opportunity. And then there's actually that trade opportunity. So I kind of don't want to let the narrative seep in too much, because then I'll start to take trades that really don't have setups. We can take a trade, meaning we just entered the market, right? But it doesn't always mean there's a setup that preceded that. So I'm going to try to just leave that in way back in the recesses of my mind. Keep an eye on the dollar, keep an eye on commodities. But remember, if I am thinking about it, if we are talking about it, it's probably been priced in to a certain degree. And awesome question. Hey there, Michael. Good morning. Last trade. Oh, yes. So our ETF formula class today is the last sort of our little get together, our 2-hour get together between 2 and 4 p.m. But then, Michael, yeah, we're going to do our think tanking. That's a verb now. We're going to do our think tanking today. Remember, we're going to have the room open for the rest of the week. And any trades that I find between today, Monday, and Friday, we'll be sending those out. So our last week, yep. And it's been going swimmingly so far. Really got some solid trades on in a fairly challenging environment. Could I please take a look at CMG? Yeah, absolutely. So moving higher on, we got some momentum going on here today. But what was the trend that preceded it? Not a trend, right? Got the non-trending environment. But here's where I see this movement higher. And I think, but of course it's going to try to move higher because the trend that preceded the chop was up, and therefore my bias is bullish. All right, my bias is bullish. So no real clear trade here. I'm trying to see if we had 4 blue grab candles. 1, 2, 3. Really close to what I would consider a nice pattern for a momentum move, but not quite. But again, it's long or nothing. But again, let's be really cautious about prioritizing markets that are choppy, because their breakouts are often going to be a whole lot more difficult to time. All right, AIG now. Here's a trend. Yes, we've had some brief moments of non-trending, but let's take a look at this. And even this tiny little non. So, I mean, we're bullish, right? We're absolutely looking at the long side. Now, let me mention something here. See this here? This was preceded by, so you might say, well, Rog, we finally moved higher. That is true, but take a look at this. We had earnings right in there. Do not presume that earnings are necessarily going to keep the trend that is in place or that immediately preceded the chop going. Earnings can be a reset, and we're seeing a really good reminder of that here, which is why I talk so much about pre-earning positions or post-earning positions, but not through earnings. And what a significant change we had through there. But I will definitely look at that as a dip. So Kamal, on AIG, Scott, see Scott. I like this as a dip. Sure. A dip into the wave. We've got earnings in the rear view mirror. It's absolutely buyable in a dip. Sure. The only thing I would say, Scott, is that look at the other group of stocks that are in this boats in tide, right? Take a look at the other boats in the tide related to AIG and just make sure that it's not an anomaly. I really don't like usually trading anomaly stocks within a sector. We want to see what the sector is doing and what some of the other names are also doing. But I like that trade. I also like KIE. So if I like KIE, then we're on a good path in terms of a group of stocks that are going to be related to AIG. So looking at, and I'm actually looking at some of the other holdings right now on my other screen. So yeah, I do like this group. Please remember AIG is a little further down the list, but this is also a non-high concentration weighted ETF. But I do like the way KIE is moving and that it's in sync with AIG. So good stuff there. All right, moving on to what are my thoughts? Hey there, Suzanne. What are my thoughts on semiconductors? After the strong move in earnings, should we just wait for a pullback? So once a market's gone parabolic, and great question. Once a market has gone parabolic, as you can see here, most definitely, it's an accelerated market in the semiconductors. We do have the 8 EMA in play. That 8, I should use red for that. We do have the 8 EMA in play. So pullback's the 8. Not my favorite, but it's one thing we can do. And then I like to look at a little 4-day pattern for even a shallow pullback. And I don't know that this here would have qualified, that one large green candle that touched the 8 EMA. I don't know that it would have qualified, but yeah. So the kind of pullback we're waiting for could be a little bit more shallow, Suzanne, right? So great thought. And then, ask yourself, are there any other stocks in the SMH that could be an alternative, maybe a proxy for the broader sector? So good stuff. All right, next up is, can I look at BKK? I got to make the font on my screen bigger. There we go. Can I look at BKKT for a bounce up? I don't know what this is. I don't know what backed holdings is in terms of how it would relate to sectors that I'm watching and so forth. But it's green, right? So it's definitely green, Alan. It's definitely green. Pullback. I would just want to know why this happened. And I'm sure you do, because if you're watching this, I'm sure you've got a narrative on on what that eruption was, right? Why did it go all Vesuvius on us? So, is this something that could hold on the pullback? Is there going to be another group of traders willing to step in? Be careful. And what I will say is, once again, presuming you know what happened here, keep a really close eye on volume. Because here's the thing, every trade that we take, we can't be alone out on that limb. I think a lot of you know this. The reason our trades move is because we're able to position ourselves either in front of or with a larger group of market participants that are thinking the same thing that we are. And unless we have that, being alone at a level usually doesn't serve us. So the way we know we're not alone is big part of that is volume-based studies, volume ledges, average volume, value area high, value area low, point of control. We're still above the mean on the V score. So there's some things that would suggest we may get a little bit of help. Yeah. All right. Tony asks, just wanted to say a quick thank you, RH. I really appreciate it. Hey, me too. Thanks for, otherwise I'd be talking to my cat. Where is he? He's behind me on his little perch. And he's really not into the market. So I appreciate y'all showing up and getting ready to caffeinate and dominate with me every morning. Okay, William. So Natty Gas. Natty. The Natty Gas gapped up last night and then filled the gap. Is it a good buy now? I'll tell you what, William, it's still basically operating from the zone that I highlighted in a free video at the Simpler Trading YouTube channel. And frankly, as long as it can hold this area, there's a shot at a move about halfway up this range. And that's what I'm sticking with. Halfway up the range. I'm not going to short it as long as it's yellow on the lower row. So yeah, whether it's NG or UNG, keep an eye on NG. I'm not concerned about the structure or the price action on UNG, but it is where I say most traders will be better off in terms of risk control and cost control, playing UNG as a proxy to the futures contract that it is it's going to track with. All right. American Express. Hey there, Chris. So American Express takes us into the XLF, which I like to the long side. All my cards on the table. We're long Wells Fargo. We're long Schwab. Is American Express, in terms of the structure of the market, ready for a move up? Well, to answer your question strictly, as long as XLF is, yes. Take one level deeper. And so I asked this of myself. I'm going to ask this of you too, my friend. Why American Express? Right? Of all the stocks weighted within the XLF, why American Express? And I'm sure you have, there might be a different reason you've settled on that stock as opposed to my settling on Schwab and Wells. But I'll tell you, the reason I settled on those two names is because their structure was superior to so many of the other names within the XLF. And that's what the multi-chart does for me, this particular layout. I mean, it's so elegantly simple in terms of old school chart scanning and relative performance. I don't need fancy software for this. I don't need a scanner for relative performance. I just want to look at high concentration weighted ETFs and the stocks weighted within them, and then compare them to one another. And when I do that, I realize that there are some leaders in this group, and Wells and Schwab. And I'll tell you what, American Express isn't too bad. It just didn't have the double green that I saw. Bank of America was interesting. It just didn't head down into the zone that I could do anything with. So it's definitely one of the four names I would keep an eye on. But just remember, please exhaust the double green first before you move on to something that's not double green. Okay. Hey there, Mark. And great question, Chris. I mean, great question and fantastic. You're looking in such a great place because XLF is and KRE. Don't forget KRE. These are two corners of the market that we really, really like. Mark asks, oh no, mentioned you have trained me to look at the calendar. Oh, well, that's awesome. What other steps are part of my daily morning review? Mark, coffee. I'm not even being funny. Coffee, getting up early. Getting up earlier part of the morning review. Determining market bias, I'll go through the indices and look at the NASDAQ and the S&P, the Dow, Nikkei. I'll see what kind of mood the market was in at the Asian close. What is the dollar doing? What are currencies doing? ZN, ZB. I'll look at a number of markets, but that's really it. I'm just going to do the same thing, really, that I would do once the market opens. But I think currencies and indices, because they have more of that 24-hour nature, I'll look at before the bell rings. So thanks for the question. I appreciate that. All right. So Kay, and we're going to wrap it up. Kay asks, oh, good morning, RH. Gradually adjusting to the wait for it stance. Absolutely. Right. The bat, you can't see my bat on the bookshelf, can you? Love that. I love it, Kay. Kay, that's awesome. Waiting is a position. Waiting is a position. Flat is a position. Cash is a position. Look, Kay, I need people to remind me too every now and then when I'm not as active as I'd like to be, because we're dragon slayers, and when there's no dragons, there's that energy that we don't know what to do with. And even I need reminding, right? Every now and then I'll get antsy and I'll get sort of salty and ornery. And usually that's about the time that Trish will say, hey, isn't cash a position? Yeah, I really remember someone telling me that cash is a position. And I'll say, yep, you're right. And it's so true. And all of us need that reminding. So I'm glad that I've got someone that can do that for me. And I'm glad to be able to do that for you. That's awesome. And it's the toughest position. Jesse Livermore talked about, it's not my trading that made me money. It's my waiting. It's my sitting on my hands, the way he phrased it in reminiscence of a stock operator. All right. So that's it for this morning. Sorry, I ran a little over. I will see you all tomorrow, same time, same station. And in the meanwhile, be good to each other. It's Monday. Let's see what kind of opportunities we can find. All right. Be good to each other, gang.